Why is it that consumer financial apps want you to buy anything other than Bitcoin? The answer is simple. They make all of their money on everything else. They know if people buy Bitcoin, that is a destination asset. You buy Bitcoin to hold on to Bitcoin because Bitcoin is money and will outperform everything else in the long term. And the problem is if you own Bitcoin, they make money from you once when you buy it. And maybe if you have to convert it back into US dollars to buy stuff later. But that's still, they get maybe 1% on the front end, 1% on the back end, and in between, years could go by. They don't get any of your money. Other assets don't work that way. What they really want you to do is trade stupid coins. Things like Solana and Ethereum and XRP and all that, because they know those are not destination assets. Nobody holds those assets. Those are greater fool assets where people are constantly trying to pawn them off on someone else. And so they're making 1% every time. They're making it on the buying, the selling, the rebuying, the reselling, the rebuying, the reselling, the buying and selling by someone else, the buying and selling of somebody else. So they're making a ton more money off of every other cryptocurrency other than Bitcoin, which means you are keeping more of your money if it's in Bitcoin than if you're in anything else. Because again, they really want you trading and buying and selling all sorts of stupid stuff because they get a cut of 1 or 2% every time you do it. With Bitcoin, they get like 1% one time, and then that's it. The same way, Robinhood, any of the consumer financial apps, or any platform that Gemini, for example, any platform that will allow you to buy anything other than Bitcoin, you're constantly getting these alerts, push notifications about, hey, there's some new IPO. Do you want that stock? There's some new this. Do you want to buy some of that? There's some new token. Do you want to buy some of this? Because again, they want you to be transacting. They want a lot of transactions in and out of stupid stuff because they get their 1% or 2% cut every single time you move in and out of anything. So the right thing to do is buy Bitcoin, sit on it for as long as conceivably possible. Or in my case, I spend, because I'm 100% Bitcoin, I spend Bitcoin with the Coinbase debit card, but I don't buy any of the other junk. Every time I get stupid push notifications for stupid stuff, I ignore them. I'm not buying stocks. I'm not buying bonds. I'm not buying stupid, worthless tokens. I'm buying Bitcoin and I'm sitting on it for as long as conceivably possible. That is the same reason, not with nefarious intent, that your financial advisor does not want you to buy Bitcoin. If you buy their managed portfolios where they are managing your money for you and underperforming the market, they get to keep 1% of your assets every single year, over and over and over. So if you park your money with them for 10 years, they get to keep 1% of your assets for 10 years. So that's 10% of your assets, regardless of whether your assets go up or down. Your assets under a managed portfolio can have their worst performance in a decade. They're still going to get their 1%, no matter what, just no matter what. So investment portfolios always want you to park your money in a managed portfolio. So the same conversation about Bitcoin, you will have that same conversation if you talk to your financial advisor and say, hey, I want to move into an S&P 500 index fund, for example, which, those S&P 500 index funds charge you like 1/100th of a percent, or maybe 2 or 3/100ths of a percent. Basically, it's almost free to be in an S&P 500 index fund. But your financial advisor does not make money if you're in an S&P 500 index fund. They certainly don't make money if you're in Bitcoin. And so typically a financial advisor is going to discourage you from putting your money in the S&P 500 stock market index because they don't make any money. They make money one time when you buy the index, and they make money when you sell the index, but they don't make any money in between. So an ETF, an exchange traded fund on the stock market, works very similarly to the way Bitcoin works for financial advisors. With Bitcoin, you buy it one time and you hold it, and they don't make money in between. With an exchange traded fund, you buy it one time and hold it, and your financial advisor, doesn't make any money in between, which means your financial advisor wants you to be in a managed portfolio, which typically radically underperforms the stock market. So almost all the managed portfolios underperform the stock market and the stock market benchmarks, meaning you would have been way better just keeping your money in the S&P 500, but they don't get that 1% if you do. So they want you in a managed portfolio because that's how they make money. That's not how you make money. That is how they make money. And the consumer financial apps all want you to buy stupid tokens or buy stock market IPOs or stocks and bonds and anything. They want you to buy anything other than Bitcoin because if you buy Bitcoin, they make less money. You make more money. Your wealth increases, but they make less money. So all of these platforms have a very strong incentive to market stupid stuff to you that's bad for you, which they have every right to do. Everything that's legal is fair. There's nothing wrong with them marketing to you. It's just bad for you to actually follow through on it. It's like most marketing. Most marketing for most things in the world is bad for you. And so your job is to not succumb to the marketing to do stupid stuff, to buy stupid tokens or to buy stock market IPOs that you don't even know what the company is. Anyway, the one thing that puts you better off is Bitcoin. The person who pays the least fees and the least money to someone else when you buy Bitcoin is you. Bitcoin is the best asset for you to own because it's the asset that other people make the least money on from you when you own it. And its performance outstrips and outperforms everything else in the stock market. So not only does Bitcoin go up in value over time, now it goes up and down on its way up. It's a volatile because it's so early in the adoption, because you are early if you're buying Bitcoin now, because it's early in the adoption cycle, it goes up and down on its way up. But not only does it outperform every other asset, you're not sharing your money 1% all the time. If you're buying and selling stock market IPOs, they're getting 1% every time you're buying and selling, jumping from one to the next, to the next, to the next, to the next. Before you know it, they got 20% of your money. If you have somebody in an actively managed portfolio by a financial advisor that is managing your money for you, they're getting 1% of your assets every year. After 20 years, they got 20% of your money. Now they would argue, yeah, but your money's going up in value. Well, it's going up faster in the S&P 500 than whatever your stock market actively managed portfolio. It's highly unlikely your actively managed portfolio is outperforming the S&P 500, which is the benchmark for effectively the whole U.S. stock market. So, what you need to do, what I recommend you do, again, this is not financial advice, not legal advice, not any sort of that advice, but what benefits you the best is buy as much Bitcoin as you can, hold on to it for as long as conceivably possible, and don't give a financial advisor 1% of your assets every single year to underperform the market, and don't give consumer financial apps 1 or 2% of every transaction while you bounce all over the financial ecosystem investing in dumb stuff. Just buy Bitcoin, sit on it for as long as conceivably possible. That has and will continue to be the best strategy. It's that simple, everyone. It's literally that simple.